Good evening or good morning, good whatever time it is you're listening to this. I'm going to be going over the datasets and the SPY for February 28th, 2025. And with that said, let's go ahead and jump straight into the data. Now, today's a pretty important data day as we have the PCE data, which is the personal consumption expenditures. The consensus is seeing that some of these are going to be ticking upwards slightly. We have the core PCE year over year. They're expecting to tick downward. Year over year January, expecting a slight tick downward. So they're looking at a tick downward in the PCE, but I know that the last FOMC meeting, the our Fed Powell basically said that personal expenditures were seeing an uptick, and I know the Beige Book was also saying that as well, due to not the labor market but just stronger spending in consumption or in consumers. So likely we will see that excuse me, uptick just slightly, but hopefully that comes in with a consensus because the market absolutely melted yesterday. Now for the other data sets, we have the PCE in the at 8:30 in the morning, but we also have the Chicago PMI at 9:45 a.m. And then we also have the Atlanta Fed GDP at 10:30 a.m. These two data sets aren't going to do a whole lot. It's pretty much going to be the whole PCE data of whether that's going to move the market or not. Now, like I said, the market is did melt pretty bad yesterday. So if we get a really good reading, which means cooler numbers, then we are going to see the market very likely go upward, as that's going to pull the yields down, that's going to pull the dollar down, and that's very likely going to cause equities to gain some weight. But if we see the PCE prices come in hotter, or their numbers anyway come in hotter, then very likely that's going to increase the yields, increase the dollar, and probably dump the market down more. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And with that said, let's jump right into the TA. And as always, let's go over the moving averages and the Bollingers, as those are super key levels. The 5 MA is currently at 594.20. The market closed at 585.05, so almost a full $9 under the 5 MA currently. And when I say the MA, that's the moving average. Um, so it closed $9 below the 5 MA, and it closed below the lower Bollinger, which is currently at 589.14. That means that the lower Bollinger is going to pull down more, and very likely this is going to be considered day one of a lower Bollinger move rather than this move right here. Just because it pulled back upwards above the Bollinger, it's very likely not an extended move, but rather just its own. And with that said, though, going over the other moving averages really quick, we have the 10 MA at 602.52, and then we have the 20 MA at 602.82. So the 10 MA and the 20 MA are pretty consolidated right now. They're not out of strike range, but I mean, they're a whole 14 or 12, $14 off right now, give or take, based on if we pull up there or not, right? But we shouldn't even be looking at those levels really. We should be looking essentially at the 5 MA and the bottom Bollinger. Now, quickly going over bottom Bollinger moves again. Uh, when we get the first day, usually the first day is the initial day one of the bottom Bollinger move, which is a very significant move pushing into or at the bottom Bollinger level or pushing below it. So since we closed significantly below the bottom Bollinger by a whole $4, this is a good bottom Bollinger move. what we should expect during today's session is that we're going to get a lower low, and then we're going to slowly start pulling upward again and heading back to the 5 mile over, a period of days. So likely next week we start heading back to the 5 mile. Now, we have a really massive gap right here, which is very likely going to be hit during the session today. But this creates a very large inverse cup, and let me just draw that out really quick. Um, well, that channel finally broke. Let's go ahead and delete it. So we're going to delete the micro buying channel for now. It's no longer any good as that broke through it. We now have the major buying channel. Uh, I'll discuss that more in the next video on Sunday. But for now, I kind of just want to highlight this inverse cup because it's essentially at this 582.14, and I'm going to try to nail it as close as possible. The wonky cup is struck back. Okay, so it essentially goes down to there. So if you're looking at this very closely, this isn't going to break this bottom channel very likely. It's very likely going to bounce off of it or come very slow or very lightly below it or right at the channel and then pull upward. Now, we expect that 582.14 level. That 582 is above this line, almost by a whole $1.50. So we still have significant room before we have to worry about the whole bottom buying channel being broken. But it's very likely they fill that inverse cup out and then they start working on a handle. Now, this handle will be what breaks out of this major buying channel if they want to continue to sell downward into possibly the 565 gap right here. So say if they finish out this inverse cup and handle, then they take it down to about there, and then it goes one level at a time, but very likely they'll pull it down to that 582, get the liquidity they need, start building a bullish structure in this area. Let's go to the 1 hour chart actually. And I'm going to delete these lines, but this is essentially where the cup bottom is going to be. 1 second, I apologize. Okay, so we're at the bottom of the cup right here. It's very, very likely we form some sort of like inverse cup and handle. And we could take that area very easily. And let's see if it shows us on the daily. No, it's not going to show us on the daily very well, but essentially you could see the inverse head and shoulder liquidity. That would pull us upward and form a cup upward to head towards the top of that upper consolidation channel. And just going back to the 1 hour time frame again, that would fit very well within this structure to do so. We have a very large gap, as I mentioned before, at that 582, which is right here. We also have a gap all the way to the 575, so we can take that. We can head down and take that, and again build that inverse head and shoulders or cup down at that area to head upward. It's very likely we're going to find support in this zone. Very likely, and I know that looks like a little cute blob monster. But this is very likely the zone where we're going to find some support. And we have a couple areas, like I mentioned, that 582, and then we have the 575. So very likely we're going to catch something in here and then head upward. And once we do start heading upward, we can start looking for the cup to fill for this 613. Now, I apologize if you hear my daughter screaming. It's getting late. I don't expect this cup to fully close upward, but very likely we're going to start building a handle upward to form that larger inverse cup and handle if the market is going to break downward. So I think I covered everything. The daily ADL pulling down significantly. I mean, this was probably the worst selling we've seen um, this year, if not since last the beginning of August. This has been pretty bad selling. So essentially, look for bullish structure to start forming on that day two of that bottom Bollinger move. Look for the lower low. Then we're going to start pulling upward and catch up to where the 5 mile is and essentially consolidate into the next move, whether we head upward to the 20 mile. So looking at that on the larger scale time frame, whether we pull down, say to this, 582 level or even 575. I don't expect the 575, but let's just say they take that gap because it is able to be taken right now. Um, it's extremely likely we'll come back up to the 5 mile. And right now the 5 mile is at 594. So if we keep pulling downward, the 5 mile is going to come downward towards us, but it's not going to come downward super, super quickly. So for example, since the 5 mile closed at 592 or 594, and since the market is at 585 right now, it's very likely we're going to see the 5 mile opening around 590, maybe even 591. And yeah, so by the time we catch support, we can be in the 587, 588 area, and that would give us range to either target back up to the 20 mile again, and the 20 mile is going to pull down slowly, but that can give us range to target back up to the 20 mile or back down to the bottom Bollinger. But that will be for next week. For now, let's just focus on uh, playing out this bottom Bollinger move, getting through the selling. I do think the selling is going to start tapering, as I said. Very, very, very likely we're going to start seeing some sort of bullish structure and at least fill up to this 598. I'm not saying it's going to happen fully today. Very likely it won't happen fully today, but very likely starting next week, Monday, Tuesday, Wednesday, give or take, we'll see the move to um, retest some of this liquidity upward and you know, see if this selling is actually something major or not. I mean, yeah, this was some of the strongest selling we've seen in months, but we need to know if this is going to continue and turn into an actual bear market or not, and if this is the end of tech or if this is going to leg upward. So far, it looks pretty bad. All of that selling today was beyond aggressive. I haven't seen selling like that in a long time. But just going over the weeks, I mean, if you really look at all this buying and selling, it's mostly selling. You pull upward, sell all the way down. Pull upward, sell down. Pull upward, sell down. Struggle to pull upward, sell down. Pull upward, sell down. I mean, it's very push and pull compared to the rally where it was just a lot of upward buying, some selling, upward buying, some selling. We're just getting beaten up in this area. Anyway, I'm gonna go ahead and end the video here. I don't want to keep rambling. Trade safe tomorrow. I hope everyone has a great day and a great weekend, and we will discuss what's going on during Sunday's session. So I look forward to talking to you guys then. Have a great weekend.